Hi everyone, I'm Shawn Severson, CEO and Head of Market and Thematic Research at WTR Research. Welcome to this week's summary of our weekly commentary for the week of August 17th. Before I get into the 5 most important things from this week's market commentary, let me start where it counts, with what to actually do with it. First, stay with the profitable end of the small cap market. The Russell 2000 closed Friday at a record on the day July retail sales went negative. The damage landed by sector, not by size. Inside the index itself, the median small cap retail name fell about 2.3%, while the rest rose 0.5%. The consumer misfound the retailers. It did not find the size trade. Second, the quality tilt now has a sector expression, the CapEx side of the economy. Small cap aerospace and defense rose 4% on the week and is up 22% on the year. Electronic components 6 and 68. While consumer-facing retail is the name to avoid, CapEx strong, household discretionary soft. Third, what we would not do is extend. A September rate cut is priced at 0. The live debate is whether the Fed hikes. What would change our mind is in the note, another negative retail month or a second month of private payrolls under 50,000, a 10-year holding above 5%, revision breadth in the WTR small and microcap universe turning negative, or high yield spreads breaking wider. None of those fired. Okay, here's the why behind all of it, the 5 things that drove the week. Number 1, the record and the miss on the same day. July retail sales fell 0.6% when a small gain was expected, every cut of it negative. The Russell 2000 still closed at an all-time high. The market treated it as a sector story, not a size story, and for now the data backs that. Number 2, the front end gave relief and Friday took part of it back. Inflation cooled on both prints. With a cut priced at 0, cooler inflation only buys a smaller chance of tightening. The 10-year finished at 4.68%, up 3 basis points, and it rose into Friday's weak retail print. A $432 billion July deficit, well above expectations, is one plausible reason the long end stayed heavy. We would not call that settled. Number 3, the year-to-date ladder runs upside down. Ranked on the year, microcap is up about 27%, the S&P small cap 625, the Russell 2024, the S&P 500 about 14, and the Magnificent 7 under 4. 8 months of that is longer than a positioning unwind. Price leadership has genuinely moved down the cap stack. Number 4, quality is still the spine. Loss rates last week ran from 0% at the S&P 500 to about 89 at microcap. Part of that is index design, but the direction never changes. The stronger evidence is revisions. Inside the WTR small and microcap universe, estimate breadth in the profitable fundamental segment is positive 10% this season, while the pre-profit cohort is negative 22. The numbers are moving up where the earnings are. Number 5, this week the retailers answer the data. Home Depot Tuesday, Lowe's, Target, and TJX Wednesday, Walmart and Ross Thursday. 6 retailers, 8 days after the retail sales miss. Walmart and Ross read on trade down, Home Depot and Lowe's on big ticket demand financed at today's rates. Guidance is what matters, not the printed quarter. Add the Fed minutes Wednesday, read for the hike debate. And before I let you go, a quick lightning round from our quick read. The 1-page summary at the front, on the corners we didn't get to. Valuation. The cap-weighted versus equal-weighted S&P gap narrowed for the first time in 3 weeks. And it narrowed because equal weight re-rated, which is what real broadening looks like. The profitable segment of the WTR small and microcap universe has already re-rated from 13.6 times in March back to 16.2. Crypto, Bitcoin fell almost 3% in a record week for small caps. The speculative surge you would expect is not there. And commodities, energy led the market, but the move was refining margins, not the barrel. We hold that leadership loosely. That's the week, the read up top, and the 5 things behind it. I'm Shawn Severson with WTR Research. Thanks for listening, and I'll see you next week.